All right, welcome back to the Kansas City Commercial Real Estate Market Pulse, sponsored by Midwest Commercial Real Estate Advisors. That's us, your full-service commercial real estate brokerage team here in Kansas City, serving the Kansas and the Missouri side. This is our team here. We've been adding some individuals to our group of recent. Mitch Case and Derek Schatzer have both joined the firm with very specific niche focuses. Mitch has been on the Market Pulse 2 or 3 times now. You guys got to interact with him, learn about more what he's focused on. But Derek has a very specific focus, helping dentists sell their businesses and the real estate that goes along with it. Look, we have, and I'm excited to talk with Cory about this today. We'll get him introduced here very shortly. But we have an uptick in opportunities that have been coming through, and we have been listing. We have a lot of land opportunities with development potential. We have retail, office, multifamily, industrial, and skilled nursing facilities. So if you are interested in any of those types of asset classes, leasing or purchasing, or you're an owner wanting to know, hey, what's the market like right now for selling my asset, please do reach out to us at mwcreadvisors.com. We can turn around proposals and what we call property performance audits if it's an investment sale very quickly, to the tune of 1 to 2 days. So please do reach out to us. We're layering in a lot of artificial intelligence, aggregating a lot of data that took us a long time to find, and then putting in our own market comps to put this together for you guys very quickly. So that's our team. Very excited about the growth of the team and the show. You know, we're on, I think, episode either 38 or 39 now here on the Market Pulse. So we're very excited about that. Yeah, episode 39 of the Market Pulse. And Cory's got his own podcast and show that he's been running for quite some time. It takes a lot of work, guys, but our goal, our aim, is to continue to deliver valuable, up-to-date information. So very soon, we will be focused on bringing a Q3 market update on all asset classes. So I'm excited for that opportunity. We're waiting for some of the data to kind of come in so we can validate some of those numbers. But we've been covering the multifamily market. What's listed? What's out there? What are things trading for? You know, what is the opportunity? Where are the opportunities? How many opportunities are there? So check out a couple of the previous episodes if you're interested in the multifamily space. And we are now working on a brand new 18-unit listing built in 2020, 100% occupied, fully hands-off. So if you are a 1031 exchange investor looking to identify a property in the next 30, 45, 60 days, please do reach out to us about that, because it is a fantastic opportunity for you to purchase. Okay, without further ado, my man, Cory Zelnik, is in the house. He's the founder and CEO of Zelnik Company, and he's a podcast host where I've been so graciously hosted on the show. But Cory is a veteran in the real estate space, right? He's led some of the largest corporate real estate expansions on the East Coast. For over 3 decades, he's been representing major brands, including JP Morgan, Panda Express, Smashburger, Dunkin' Donuts, and he really does specialize, and we're going to talk about niche specialization today in the retail strategy for top national retailers and prominent property owners. I have had the pleasure of getting to talk with Cory 3 or 4 times now, even dove into some real estate deals here in Kansas City. He's a wealth of knowledge, and I'm super excited for him to be on the show. So, Cory, thanks for joining us today.
Oh, thanks, Logan. Thanks for having me. I'm looking forward to the conversation.
Yeah, it's going to be a great one for sure. So why don't you take us back to the beginning? You know, what did brokerage? Well, let's say, how did the journey start? And then what did brokerage look like when you first got started?
Then and now. That's pretty funny. You know, one, I got into the business, like a lot of people, I guess, by accident.
Yep.
I came out of school, and I thought I'd be going down to Wall Street. Wasn't prepared for it. I blame nobody for the lack of guidance. I just wasn't prepared, and I learned my lesson quickly. And I spent the summer after school playing a lot of basketball, a lot of softball, and came across a friend of mine who was working for a local organization that's no longer in existence, and their only specialty was retail leasing at the time. They were the only group doing it in that format. and somebody said, hey, he was working in their Long Island office, and he said, hey, they're looking for somebody in the city, and I'm a city boy. And they said, hey, we'll pay you $250 a week to walk the streets. And was literal. That was literal. And that's what I did. I came in back then. It was a suit and tie. It was a suit and tie world. It was the first Tuesday. It was the first Tuesday after Labor Day, and I walked in, met the gentleman that I was working for. He handed me a clipboard and a map and a pad and a pen, and said, "Go walk First Avenue top to bottom, and then walk Second Avenue bottom to top." And just take notes. And, I was looking at storefronts and availabilities and tenants and all of those things. And what I get a kick out of now when I have this conversation often is that, and I know we're going to get into it, how things change, but the reality is that when a kid comes and interns for me for the summer, or a kid comes and works for me day one, I tell them to do the same thing. Because I give them the clipboard. Maybe there's a little more information. We have our maps. Technically, we're technically sound, so the maps are on the phones and things like that. But It's really the same thing. It's going to walk the streets. It's very much and remains, and I think it always will be, a feel and touch business. Again, I know how technology has advanced things in so many ways, and I would hear I've heard stories about like the Starbucks of the world, that if you were giving them something in middle America that was just that typical 20 by 100 foot box, or that standard drive-through, that someone won't even come, and they'll just use AI and they'll develop the plan based upon the CAD and da 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 da. And I guess that's wonderful for certain parts of the country, but certainly here in New York City, it really is about feel and touch.
Yeah. So we've got a slide up right now, and I'm proud to say that if you are watching or listening on Spotify, you can go and toggle the video on so you can see these slides. What a cool new functionality. And we are uploading the videos to Spotify so you can see all of the information. But if we're looking at then, Cory, what year was then? When were you walking those streets and doing that work?
Well, my original then was the summer of 1986.
Wow. Okay, and 1986.
So I predate your then picture, because the company did not have computers on our desks. There was one computer for the company.
Okay. Yeah. Wow. Doing real estate without a computer. Can you imagine? Hey, we've got a lot of listeners and viewers watching in. One thing I did forget, if you got a question for the man in retail, real estate, New York City, been doing it since 1986, drop your questions in. You're not going to get access to Cory all the time like this. He's very gracious with his time. We got on a call, but he's here live now. So make sure to drop your questions in if you got something for Cory. So real estate without a computer, without.
And by the way, that was a company of 40 brokers.
Wow.
Okay. And so the one main computer was where anybody and everybody was supposed to enter the listings that they found.
Yes.
That's what the computer was about. And once a month, everybody would get a new printout of the listings on the old big, wide, like green and white paper with the holes in it and the tearaway. You probably weren't even born. But
I wasn't. I know the paper you're talking about.
Yeah. So that's what it was. And during the course of the month, on a weekly basis, the couple of listings that might get entered, someone will put it in the computer, and then they print everybody out a sheet of the updates over the course of the month.
Yeah. So those listings would come out, and then what would you do? I mean, what would you do with those?
The listings?
Yeah.
Well, you'd be calling tenants and things, and you'd be hawking space. And back then, and this is the evolution, part of the evolution of the business. Tenant exclusivity was a rarity, certainly here in New York City.
Yeah,
very, very rare. So what you really wanted to do, as in any transaction, you want to, as they say, you want to control at a minimum, one side of the transaction at least. And so back then, it was really about controlling space.
Okay.
And so controlling space was, the clear exclusive agency, if you were able to get it. Things were a little scrappier back then. So sometimes you can convince a landlord to allow you to put a sign in the window with your name and your company phone number in there that would give the appearance of exclusivity. It was a little sketchy, but it would give the appearance of exclusivity. And so guys would be doing that. It was really about space control, because even at that point, retail was really just in its infancy. Like I said, the company I was working for was the only large company doing it. There was a smattering of brokers around the industry, but it was not the primary focus. That came, a few years after that, when retail really became a focus here in New York City.
Okay. Yeah. Good question just came through. So Cory, we've talked about what you do with your new summer interns, right? That's obviously stayed the same, but like generally speaking, what do you think has stayed the same, despite all of the change with the industry? You said it's very relationship driven and touch and feel, but give us some other ideas. What has changed over the last 30 years, or what has stayed the same? I think that's a great talking point for us to kind of get into.
Yeah, well, the same is what I talk about. That really happens. And the change, the primary change really is just the technology. It's really that, and I think that there are facets to it. Excuse me. I think that just the technology of the phone, right? The phone that's with you all the time, that you can call anybody immediately and things like that. So that's been a tremendous asset to the business. And then certainly, the internet, as you tie into whether you're finding out information about properties or new tenants in the market from across the country, Googling things like that. One of the things in the internet, Google Earth, I think is a blessing, and I think it's a blessing and a curse. The curse being the laziness factor that it is there, right? That individual has to be more willing to get up and go, and not just be willing to ride the information they see on the screen. And I ride my guys often, because especially here in the city, okay, this is my town, so I'm going to talk specific to the city. We are not filled with 25 by 100 boxes. We're not. We have, our spaces go up a step, down a step, they go left, they go right, they go high ceiling, low ceiling. There's all kinds of stuff. And so Google Earth is fine if you need a quick snapshot, but if you're going to present that to a customer, you need to know about that space.
Right. Yes.
And so certainly if you're touring with a prospective tenant, the last thing you want to do is show up at the space and then find out there's 2 steps in the back of the space, right? You need to know that beforehand. So it takes that kind of work. So that's a little bit of that technological curse, I'll call it. But shy of that, it's been great. And then in looking at what you have on the screen there, at this stage of the game, data, AI, they're huge. They're just huge. So many of the larger brands, when it comes to retail, the larger corporations, they are so data crazed.
Yeah,
data crazed, and you just got to keep feeding them. Placer, you call all these things, and for us, for retail, it's traffic. Across the country, it's about vehicular. In the city, it's pedestrian traffic. We have subway counts. How many people are getting on certain subways that may be situated near a particular property you're showing, and so the access to that kind of stuff has been a huge plus. But as my good friend Bob Knackel always says, it still always comes back to blocking and tackling.
Yes,
the basics.
Knowing your market, knowing your numbers. Right. That's extremely important. I totally agree. The evolution of brokerage with this data and AI is also the evolution of investing, right? Because now we have investors, and maybe it was like this in 1986, but I mean, how many California folks were buying real estate in Kansas City in 1986, right? Like I would imagine a lot less than now, right? And why? Well, we've moved from information asymmetry, where those brokers and those individuals might have all that information, to information parity, where everybody has access to the same information, to where I think we are now, which is more around information overload. And if you can cut through the noise, you're standing out, right? And so, but like a prime example of this would be, I have a client that has an 18-unit apartment complex that we just listed, and she lives in Michigan, and she has never been to the property here in Kansas City. Owned it for 5 years. Never been.
Yeah.
100% occupied. It's appreciated. It's cash flowed. Never been to the property, right? Let me ask you this. 30 years ago, would that happen?
The person, they wouldn't even be having a conversation. She would never purchase the property to begin with. It's certainly not, at the very least, without having flown down, done that level of diligence, because everything you just talked about, and that is there, it has to be done. And then you have to even know about the management. You have your third party management, right? You have to have a certain comfort level. And quite frankly, it plays that way with retail. I've spoken to people, social media has been great. And, we'll probably talk about it a little bit in terms of meeting people. It's how I met you, obviously.
Yes.
But when it comes to retail, I always tell people, I'm a New York City guy. It's my home base, what I do. But a fair amount of my investments are out of state, because to me, I could do retail anywhere in the USA. One, information share. Two, Google Earth. There are certain key components to the physical plant that once you see it, you get a good sense of it, and then you dive into the data, right? You dive into the demographics, and you dive into the co-tenancy, and you dive into who's up the block, down the block, and all of those things. And so, same as that person who buys, out of state multifamily, the same way I look at retail.
Yeah, makes complete sense. Okay, so in regards to, you've been in the industry for a while now, and I'm sure you've seen people come and people go, right? So maybe what separates in your mind the brokers who've adapted from those who got left behind, right? Like what is it? What's the makeup of someone who's had that staying power since 1986? Like Cory Zelnik, Bob Knackel. I'm sure there's other folks in New York City still rocking it and have become these rock star, superstar, thought leaders in their space. But like there was, I'm sure, a lot of people that you started with that are off doing something completely different, and they didn't have that staying power. So maybe what separates those brokers, who have adapted to this change?
Well, I'm not going to lie to you. You need a strong stomach.
Yeah.
You come in. It's eat what you kill. You go through bumps and bruises, and you really have to have a strong stomach, and you have to have tremendous stamina. You have to have tremendous, personal discipline. What comes in with years in, for me, is you have 87, the market crashes. You have 90s, the savings and loan crisis. You have 2000s. You have bubble, .com bubble bursts, and you get 9/11. Tragedies, you get financial crisis, you get COVID, you see everything. And so you got to be able to, fight your way through all that stuff. And what comes with the staying power is, one, understanding biggest and simplest cliche. It's a marathon, not a sprint.
Yep.
And you really, how would you prepare for a marathon, right? You're not going to wake up tomorrow. Maybe you can. You're in good shape, but you're not going to wake up tomorrow and go run. What are you going to do? You're going to run a mile, then you're going to run 5, then you're going to run 10. And so you got to build, and that's the basis of this business. And you're getting in shape, if you will, is the relationship you build over the years. It's constant. It's constant calling. It's constant walking. I tell my guys, if you're having a tough day, or you hang up the phone and there's that one tough call, you lost a deal, or a deal's going sideways, I like to quote my coach Krzyzewski, Coach K from Duke, where one of his most famous lines is "next play." Yeah, just that's it. Next play, and what comes with next play in our business, you literally, I just say, get up, go walk around the block. Go get some fresh air out. And, oh, by the way, while you're out there, take a look at some of the stores. Get your mind working again about what the next play is.
Yes.
And
Get you some hope. Get you some hope.
That's all. And hope's a hard thing, but you got to work every day, for the challenges. And quite frankly, one of the biggest challenges in this business, just getting up in the morning and going to do it. Because those of us that have hung around long enough, we tell you, we wake up unemployed every day.
That's right. That's exactly right. And you got to take the stairs, not the escalator, right? Every single day. So one thing that I would like to ask you is, through your career, and I get asked this a lot, I started in 2017. So I have not even been in this industry for 10 years, right? So when did you start to see, okay, I'm more confident, I'm actually getting some listings. I'm having some traction in this business. I know what I'm doing. Was it 10 years in? Was it less than that? Was it more than that? When did you start to feel that for your career, Cory?
Well, I guess I got lucky. But I was doing the work, and it probably took me, by my third year, I was starting to get some legs. Okay. And I guess some people that are listening to us may get a kick out of this, but I did the first blockbuster video in Manhattan, New York City. And so that gave me a world of confidence. Got some things going, and a little bit of, and Blockbuster at the time was really just part of a very, very small handful of national chains that were coming to New York at the time. It didn't make me special. I hit it right. I cold called. I came across the right person, blah, blah, blah. I did all that stuff. But there wasn't a lot of that going on. And I was able to do one more. Rollouts were different then than they are today. And a lot of the big companies, still when they come to New York, because we're pretty much the most expensive town to do business, is really they all want to be, everybody wants to be here for the demographics and for all the excitement that is New York City, which I love. But oftentimes they come in and they get their feet wet with one or two, and really just try to get an understanding of what it means to work here. And so that was by year 3, year 4, I was doing some blockbuster work. And then along the way, it was, you do a Chinese restaurant here or there. And to me, I laugh. It's ironic that one of my first sort of knock on the door deals was a Chinese restaurant, because many years later I wind up representing Panda Express.
Yeah.
It's like a fun irony. But yeah, so it took me 3-4 years of getting my feet wet. And quite frankly, I was unsure along the way. I bounced at a couple of companies because I was young and stupid. Yeah. And then I hit it right, and then I hung in. And even after that, there were still plenty of bumps and bruises along the way.
Yeah. Man, I know you can't see this, but I can see it on my end. You're getting all kinds of reactions telling that story right now. So live people just giving you all kinds of love and clapping and thumbs up. So that's pretty cool, man. Thanks for that. Yeah.
Thank you.
Okay, so, let's move to the power of branding, right? And I know there's some powerhouses in New York City in regards to branding, not only on the commercial side, but also on the residential side, right? You got Sirhan, you got Nackle, yourself, Ed Winslow with the proof stacking methodology, all of this stuff, right? But this has got to be a huge change for you. 30 years ago, you're in a suit walking up and down the street with a notepad and, printing out monthly listings, to now we're sitting here in front of a TV or a computer screen with lights and a presentation up on it. It's going out to 36,000 people live, nice. That's wild, right? That's completely different. And you've built a strong brand and a podcast. So how has content maybe changed the way that clients engage with brokers and been a benefit to your business?
Well, it's been great. It's been great. I'd be lying if I told you that because I do social media, I can retire tomorrow. That is not, that is absolutely not the case. And I do think, one, it's been a wonderful, fun, enjoyable, I'd say leading towards money-making type experience. The feedback is fabulous. One of my fun stories I always like to tell is through CREI Summit. where they named me an Instagram influencer or LinkedIn influencer. I called my daughter up. My daughter's 23 years old. So this is a few years ago. And I said, listen, I'm an influencer before you're an influencer. And she laughed. But what I'm finding most interesting and I'm learning, and again, I love what we're doing. I really get good feedback, but from a pure money making perspective, it's a slow build. And I watch, I would say intently, when people are peers in the social media and real estate world who seem to be making tons of money. And I don't question it. If they say they're making money because of it, God bless. But I don't know whether it's the leasing business. I don't know whether it's the New York City business or what have you. I've had referrals. I've had some leads. We pulled in a few bucks based on it. But I think that when we decided to do this, we never had a dollar sign involved. Yeah. And we said, hey, this is a great way for us in a, very reasonable capacity in terms of dollars to make a commitment to do something that is both fun and will be beneficial, hopefully, down the road. And we've tweaked here and there, and I couldn't do this. I have to mention without Stephanie Malloy. She's my partner on this. She's my director of marketing and my sidekick in terms of social media. Couldn't do it without her. And I also can't not mention my great friend Mo Regalado, Movo Media. They've been great help, and I have some fun. And we put up some pictures, and I'm fortunate that my backdrop is one of the more fun cities around town. So if I pick up the camera and I start talking and New York City's in my background, I get a few likes.
Yeah.
But they like the background.
And I pull out my phone and all you can see is, cornfields and bean fields and cows. That doesn't get as many likes. I'll tell you though, but if I get in front of that Chiefs at Arrowhead Stadium and I take a picture in front of that, man, people do love that, right? So, no, it's all good points, right? And I think people think there's a big difference between using social media as a tool in your toolbox versus getting into this business saying I'm going to be a real estate influencer and that's how I'm going to make money. Yeah. And you can clearly see the difference between the two, in my opinion, right? You see the real practitioners out there. Hey, here's the market statistics. Here's what we're doing. Here's the deals that we have closed, right? Here's what we're working on and what we're focused on versus, hey, let me make another video about the trends that I'm seeing from the CBRE report that came out last week. That can be valuable, right? Don't get me wrong. But there's a big difference between the way that I think you use social media in your business, depending on if you're just trying to gain influence and followers or you're trying to use it to kind of fuel your real estate business. And for me, really being able to kind of carve out my own niche, and that's what we're going into next, is really been able to say, okay, if you're thinking about commercial real estate in Kansas City, I am now usually in that conversation, not only from an SEO standpoint, but from people who know me and who have worked with me in our firms. And they're saying, hey, you may want to talk with Logan and Midwest Commercial Real Estate Advisors. How? Well, I didn't start 30 years ago walking the streets. Also, we have 316 square miles in Kansas City. It would take me months and months to walk all of the square miles, not because of all the stores and the people that we have, but just because we have such a large footprint. I think it's the same size as Manhattan, believe it or not, but we only have 500,000 people that live in Kansas City MSA. So that's a wild statistic, right? So it's actually a big challenge for our city right now. In 1950, we had 88 square miles as Kansas City, Missouri, and we had 450,000 people that lived in that 88 square miles. You fast forward this year, we have 550,000 people that live in Kansas City, and we've 3x the square mileage. That's really tough on the infrastructure, the roads, everything. So it's a definite challenge that we have kind of as a city. And I do see that translating into opportunities, but also shifting, the focus in commercial real estate. That's a whole nother show in and of itself. But what I've used it as is the ability to say, hey, the niche for me is Logan Freeman, Kansas City commercial real estate, right? That's the niche. But your niche advantage in the modern brokerage world, you've carved this out in the retail sector, right? And I think that people have to understand Kansas City, New York City, very different markets, right? When I talked to Bob and had him on the show, he's like, hey, man, just go out there and start doing it neighborhood by neighborhood, right? That worked. in New York City. In Kansas City, very different strategy. But I think we know how you found your niche. It's where you got started. But how did you know maybe it was the right one to stay in?
I think that because everything I've always been, from minute one, going back to 86 till now, I've always been, I always like to say it this way, in and about the retail real estate business. And quite frankly, in the early 90s, when the market, we had the financial crisis here in the market, I was very fortunate. I got a job. I had a real job because I'm not employed now, but I had a real job then, which was working for CVS Pharmacy. Remember them? They're a little drugstore chain. And so I worked in-house at CVS, and I really and I told this to my bosses at the time, because I was there for about three and a half years and left amicably. And I told my bosses, I got a master's degree in corporate retail real estate. Through that turn, and that's, I think it was really after having done that stint with CVS was where I really just knew that I love the retail aspect of this business. And that was my first time that I got to look at the business from retail investment perspective, in terms of, again, I'm doing most of my stuff here in the city, high-rise buildings, things like that. So it wasn't like, corner lots and, 1 acre drive-throughs and all that stuff that it became. But when I did some stuff in the outer boroughs of New York City, I started to hear a little bit about that and understanding the value of a CVS corporate signature on someone who's going to invest in a property. And so from there, I started to pick up a little bit more information. I started to dabble. I have, a fair amount of LP interests on retail deals. I have some GP interests on retail deals because that's my value add. I've invested in some multifamily with some friends and things like that. Made some money, which is always great, but certainly not retiring. But while it's always nice to make money, I stopped doing that. I keep my money, and where I make my investments today are all retail related, because one, I'm a value add when it comes to it, and the GPs usually appreciate that, and I like it. I just love it. And from the CVS lesson, it evolved into me getting, I rolled out of that business. I got involved with a former partner of mine, and together we transitioned a small, at the time, 39 store mom and pop drugstore chain here in New York. It was called Duane Reade. It's still called Duane Reade. And we did over 220 of them throughout the New York City metropolitan area. And again, through that, it's a lot of leasing. It's a lot of leasing business. It's a lot of investment business. Was able to buy properties with Duane Reade as my tenant. And so I really started to appeal to me. And so all of that, it was not just taking what I learned in the drugstore business, but it was the drugstore business, it was the investment side of the business. And then continuing on in retail, generally speaking, what I have found, because I guess you can tell by you listening to me, I'm a relationship-driven guy in terms of my clients. Yeah. Like with Panda Express, it's not just a Chinese food, just not a Chinese fast food. I got to really understand the inner workings of the business, and no, I can't make orange chicken, but I enjoy, understanding the business and the various other tenets that I learn about along the way. This morning, and this goes back to the earlier slide about social media. I had somebody contact me, retail driven. He follows me on Twitter, X, whatever. And he's got a coffee concept out of Japan that was contemplating LA as a first unit in the US. And they decided they want to do New York instead. This guy reached out to me and said, "Hey, this is what I got." I said, "All right, let's get on the phone." We had a great chat, and hopefully that assignment comes my way. And so all these things come together, and I really like it, because literally every day is a new day.
Absolutely. Well, I've got a question for you selfishly, right? From my standpoint,
Sure.
As I grow my team, we have 6 full-time brokers. And I'm just curious, how do you motivate and retain great people, in a performance-driven industry? What have you seen to be successful now being able to lead a team and been in the business for so long, because I think I can take a lot of notes on this section in regards to wanting to continue to grow and attract those right people, because you can't do it alone, and I think that's important to try to realize. And it's something I've got to grow in as a leader for sure.
Yeah, well, and it's an excellent question. One, you're an athlete, right?
Yep.
And so what it takes from a discipline perspective and from a passion perspective and a high energy perspective. And at this stage of life, I say I'm a former athlete, although I run a lot. But you bring that mindset to the game, okay? And that is discipline, focus, high energy. Tremendous. I go back and say it again. Discipline. Don't let the redundancies throw you off. They're not redundancies. They're discipline. You must do that. You must be consistent. And one of the hardest things for most of the young up and comers is appreciating and understanding the true meaning of patience.
Yeah.
Because you can't be anxious. Especially, you're coming in as a salesperson, a broker, whatever you want, and you control nothing. You're not signing the lease for either side, but it's your responsibility to keep the ball moving forward. That's the business that we're in. Keep forward motion all the time. And if you lose patience and you show any kind, I don't want to say any emotion, because emotion's good, but you can't be anxious for either side. You may cost either side the deal, or you may cost either side an important clause in a negotiation. And so maintaining a certain cool demeanor throughout, very challenging, by the way, very, very challenging, and I've had many a times where I've, put the phone on mute and maybe yelled and then put the phone back on, and you got to get it out. Not every call is a Zoom call, so you can get away with that. But it's a lot of that, and then not as the last thing, but as the next thing, what I try to talk to them about on a very regular basis. And again, this business is so redundant. It's so redundant, and you're always learning. And I tell them that all the time. I'm veering here a little bit, but I did over 200 drugstore leases. Okay, and a lot of those leases were sometimes multiple deals with the same landlord, but every single one of them was different.
Yeah.
There was no cookie cutter. You got to keep that in mind. But stepping back in, what I try to talk to them about is slowing down the game. Michael Jordan always talks about slowing down the game. The great quarterbacks talk about slowing down the game. See the field, because there is, 35 something years I'm doing this, okay? Not once ever has there been a life or death situation in a lease negotiation. Never, okay? And we're not curing cancer. We're negotiating leases. So stay cool, okay? And and sometimes your job is orchestrating cool.
Yes.
From one side or the other. But I always slow the game down, see the field, see the options. Okay. And look, and by the way, you don't wake up tomorrow and know how to do that. But if you start thinking about the concept of it earlier on, and this is what I try to educate, when the opportunity or the experience comes upon you, maybe you're just a drop more ready than the broker on the other side of the transaction. Mm-hmm. So those are some of my things.
Yeah, absolutely. Thank you for sharing that. I couldn't agree more. And being able to stay objective throughout the scenario is very tough when you're in a performance-driven industry. However, the best way that I have found to do that is knowing that, hey, I have another opportunity. So we need to be out there prospecting, because if it's the one deal and you need to get the one deal done to make sure you can pay your mortgage or whatever it is, your rent, your car payment, whatever, buy the lady the ring, whatever it is, there's a lot of stress coming from you. And that added stress is distress to your deal, right? And so what I try to do is add eustress, positivity, hey, we'll get through this. Let's work through it, and making sure, even if I don't have a thick pipeline at the time, still acting like I do. It gives me that ability to say, if I show up that way, empathetically and not stressed out, I have a higher likelihood of this continuing to move forward. A lot easier when you have a big pipeline. So go get you one, right? Go create that pipeline. But when you don't, you got to try to adopt that mentality. So I love what you said about slowing the game down, for sure.
Thank you. And another thing, just one last thing to keep in mind, and this is more specific to leasing, okay? Because if you're selling a property, you show the property, offers, bids, contracts. All right, we're going to close, and as a broker, when you close, you get paid. In the leasing business, it's much different. There are typically payouts,
right?
And I told this, to my mother when I first got in the business. I told this to my first wife, and I told it to my second wife, and I try to explain it to my brokers all the time. As a leasing broker, especially in retail, you cannot time your money.
Yeah.
You just need to be mindful of that, right? Because I put a great tenant, Panda Express, great credit, corporate tenant, okay? But the landlord's building something out of the ground, okay? He's not paying me a nickel until that thing's built and they take possession. And when they get possession, I'll get half my money. And then they'll get 6 months to build their store, and then in 6 months I'll get the rest of my money. But if there are delays in construction, and I'm speaking from specific experience recently, if there are delays in possession because the landlord didn't do something right in the work, so you can't time your money, and something to be mindful about in the leasing business.
Yeah, absolutely. Going back to that patience, I appreciate that for sure. Well, let's get to the two more things I want to cover. The future of brokerage, right? I mean, if brokerage is part data, part art, and the relationship, what's the part? I mean, what part do you see changing, right? Like, I mean, over the last 30 years, it's changed. We've talked about that, but like, what do you see for going forward? How's this business going to be changing? So many folks reach out to me saying, "Hey, are you worried that your job's going to go away?" And I'm like, "You don't understand what I do, man. Like." Right. Nobody's making a $2, $5, $10 million decision without talking to somebody. At least not right now, right? Panda Express probably ain't doing a deal without talking to somebody on, hey, is this the right location, right? So I'm not super concerned about that, especially with the information and knowledge that we both have in the industry. But just generally speaking, I mean, where do you see brokerage heading?
I think we're a ways off from being extinct. Okay. Could it happen? I don't know. It's not going to happen in my working lifetime, I don't think. For all the reasons you just said, and for the reasons that I started out the show with, this is a feel and touch business, and you got to make sure you can send all the pictures you want, or not send the pictures because the pictures are available to them online if they want to go get it themselves anyway. But there's nothing like going there and feeling and touching certain things. So they need that for you. And what happens is, and speaking specific to the retail leasing business, is oftentimes where the companies want to make cuts is they don't want to carry too much payroll, right? And so what they do is they come outsource to guys like me and you who they don't have to pay, but they can get a whole shit ton of information, and they want to utilize us for that. Not because we press the buttons better, but because we know the business. And so I think they're always going to lean on us for certain types of comparisons that are necessary, for information on competition in a given market. So I think that we're needed. We're going to be needed still for a while, but it's going to be our responsibility as advisors to stay abreast of the modern technology and utilize that in the information we provide. So they never feel like, I don't need this guy, I can just press a button.
Yeah, I completely agree. Yep. And I think that's, one thing that we try to do a lot is like, how do we use the new technology to be more efficient? Not necessarily, hey man, I'm going to outsource all this to AI, but like, if I can get AI to do automations and research and things like that to help me focus on my most valuable priorities and my profit producing activities more, then I should be able to become more efficient, not only for my clients, but for my own business, right? That's where I see the biggest benefit right now. And I'm loving it, I mean, the access that we have now and the ability to list and market and talk to people is phenomenal. And I'm able to utilize different software systems that took weeks for things to get done previously with marketing. Now it's done in a matter of seconds, right? So,
Oh, yeah.
okay, now I've got more time to be more productive in talking to that owner or that tenant, right? And I can actually make a deal. So that's where I see the biggest benefit right now.
Yeah, no, I agree. I mean, if I got on this Zoom call with a prospective landlord to talk about his property that I'm hoping to represent, okay, and I put up on the screen an AI generated rendering of his property that he never even thought about, right? It's an old pizzeria, right? But we want to turn it into a boutique because that's how the market has shifted. And I introduced myself to him. We've probably spoken, but we get on the screen and I put that up there and he's like, whoa, back in the day, that was calling a company, having renderings made, fix this, fix that. And it's done for you in 5 minutes. And whether the landlord knows that or not, it's who cares. But this is what I'm showing him. And this is where my head's at for his property. Those are huge, huge things that are very, very beneficial.
Absolutely. All right. It's my favorite section. We're going to get into some quick takes with Cory. All right, man. So what's your favorite book and your favorite podcast that you're listening to right now?
I listen to myself. No, I'm kidding.
I knew you were going to say that.
The Zelnik Exchange.
That's right.
Well, I'm going to go book and show you the sequence. Let me get this on camera right. This is the sequence by Alan Buchanan. My man. There you go.
It is.
So I just had Alan on. I just taped Alan on my podcast yesterday.
Yeah.
What a great guy. What a great guy. What a great guy.
100%.
So I like listening to him. Aviva Sonnenreich is someone I love to death. I like listening to her. For two reasons. One, extremely informative, great personality. But also, I like the short form a little bit better.
Sure.
I try to keep mine fairly tight for the same reasons. So I like them.
Yeah, most definitely. Absolutely. Go check out the sequence and those podcasts that Cory recommended. All right. What about your best deal or your best client that you've ever worked on? I don't know if I should ask best client because they may be listening in, right?
Exactly.
What's one that stands out to you?
I do have, I've had my best deal I ever worked on. I have several, but I'm going to just talk about one that I like to talk about because it comes in the category of if you're willing to get something done, it can be done. Okay. Mm-hmm. And this is a competitive bidding situation between two large banks. Back in 04, 05, Chase Bank was expanding aggressively, and so was B of A. Okay. And I had a control position on a property, and I was also representing Chase Bank at the time. And I got a bid on my property from B of A that was going to be right in Chase's front yard, literally. And I called my people at Chase, right? I got to let them know what's going on in the neighborhood. Back and forth, okay. In a matter of 3 days, we went back and forth on LOIs. The asking price on the property was $125 per square foot. The final number, the taking price was $182 a square foot.
Wow.
And that's not even the fun part, okay? From complete LOI to signed executed lease, 3 days. signed on a tarmac, okay? And so I always tell people, if there's a will, there's a way. And look, you need balls and money, because they wound up, sitting on the space for a long time and paying dead rent. But I like that story a lot.
Yeah, it's a fantastic one. Thank you for sharing that. I appreciate it. All right, we've given some really good advice for brokers. A couple of takeaways for me today was patience, being able to stay objective within negotiations, right? Having that next play mentality. Maybe outside of that, what's one thing that you always try to instill in some of the brokers that you're working with, and some advice that you could give the folks listening in?
Like you said, in addition to those things, I think it's extremely, extremely important to always be positive. Don't be falsely positive so that it's, very readable that you're full of shit. But you always got to stay positive. You really have to bring a positive attitude to this business on a daily basis. Because like I said earlier, you wake up unemployed every day. And so you got to bring serious positivity.
Yeah. My son, if I tell him PMA, what is that, buddy? Positive mental attitude, right? years old. When he gets fired up, man, he gets fired up. He's passionate. I don't want to get that passion out of him, right? I need to direct that passion in the right way. So I'm like, all right, you're angry right now. That's a feeling, right? Let's get that into action and transform that into positivity. So could not agree more, man. I mean, positive mental attitude is one of the most important things in this business, in life in general. I know you're a habit-driven, very disciplined individual. You've mentioned that previously. What's one of the habits that's been key to your success over your career?
Well, I follow a mantra of proper prior planning prevents poor performance.
Say that 5 times fast.
There you go. I will say to you that that the key habit is just consistency, and that it falls under discipline and all of those things. But if you stay consistent with all the things we talked about today and all the things that you do, success will come your way over time. So consistency and patience, very important.
Absolutely. Cory, it's been a pleasure to have you on the Kansas City Commercial Real Estate Market Pulse. If folks want to learn more, follow you, listen in to what you've got going on, point them in the right direction.
Thank you, Logan. This was a great time, and I look forward to doing it again real soon.
Absolutely. Where should they reach out to you at?
Follow me on Instagram, Cory Zelnik, CoryZelnik. Same handle for X, Twitter, whatever you call it. Zelnik and Company and Cory Zelnik on LinkedIn. You could find us most anywhere.
Yeah, you won't have any trouble finding them. We've talked a lot about the brand and positioning. If you want to talk to us and our team here in Kansas City, just reach out right here at mwcreadvisors.com. We're located right in Kansas City. Thanks again for everyone tuning in to another episode of the Kansas City Commercial Real Estate Market Pulse. We'll be back next week with another show. Cory, thanks again for joining us.
Thanks, Logan.